Hi, good evening, everyone. Welcome back to the channel. So in this one, we're going to discuss basically dumping YieldMax, dumping TSLY, dumping anything you've been holding the bag on for years. The gist of it, I've been holding the bag on some of these funds for over 2 years, but today I finally pulled the plug. So that's what we're going to cover. Let me just take care of some business here really quick. Um, I like this tool a lot, but it just takes you live just like that. So bear with me here. Um, just need to make sure that this is taken care of. And this way done properly. All right, here we go. So today, folks, was not gonna lie, it was one of the most brutal days that I've ever had as a trader. Um, and this is a big boys game. We gotta, obviously put on our big boy pants and move forward. So it's not for the faint-hearted for sure. I got a lot of you that are probably going to come out of the woodwork because you all want your, popcorn moment here, seeing the coach, with some navigating some margin situations. Hey, welcome, Chuck. Margin caller just wanted to pay it off. Boy, look at all of you all. You all are like instantly here. I call it the popcorn moment. Hey, Andre's on. Welcome. Wasn't sure you were ever going to get rid of TSLY. Well, kind of forced my hand today. I just want to say, folks, most people have no business whatsoever using margin. Luckily, I only have it on one account, and I can tell you I will be getting rid of it ASAP when I come out of this little kerfluffle that I'm in. I hate having to do this, but I had to rip the band-aid off today. I went ahead and sold it all because I needed to. Obviously, SMCX got wrecked, and there's some people out there that are absolutely ecstatic over this. Funny thing is, to the haters and stuff out there, you will never see a word about the fund when it's up, which I think it's probably been up more often than it's been down over the last year, if you look at total trading days. But you won't hear a single peep when it's up. But when it's down, oh my God, you get like hour by hour. Like that's how close the haters follow it. But anyway, nonetheless, my TSLY position that I originally bought in several different lots. You can see going all the way back to 2023 when I bought the first of it, and obviously it reverse split, and this is ugly, but you got to rip the band-aid off at some point. And I was starting to get nice weekly dividends. I was taking in like $400 a week and stuff like that. So I hate to part ways with this, but you got to do what you got to do. The funny thing is, I actually bought more of it last November when it started going up because I wanted to have an even number of shares after the reverse split happened. But you all can see in my history here, back to April of 2023, I was buying in different lots of it. I was even at one point dollar cost averaging the dividends that I got. And you can see literally every tranche of it was a loss. So the good news is, here's the thing. I was going to do some variation of this anyway. Yeah, Doug, I'm not talking about our Discord. There's other Discords out there where there's some absolutely, utterly vile people that literally root for people to fail. And yeah, I don't want to give it too much attention, but it's not in our Discord. You all are pretty good. I make sure of that. But anyway, let's see. Feed the Family says we live to fight another day. Yeah, I actually had another person. I had a couple people that left my Discord, probably over the Kumair situation or something. Now they came back to. They're like, "Ooh, Coach mentioned something about margin. Let's go and let's pop some popcorn and get some entertainment here." You know. But anyway, here's the deal. So I believe find the positive in everything. So I've had a great year, obviously. If we go out, for the entire year, well, here's the funny thing. This account, what sucks, since I rolled this to Fidelity, this is the first trade that I have made, which was a basically $20,000 loss. Um, and then I did another stupid thing here. Well, I was at a gain with NVDL puts over here, and I actually rolled because I'm trying to free up some capital. So I have some more YieldMax. Honestly, here's the thing, folks. After I had Mike on yesterday, Mike's a cool guy. He's a good guy, very smart guy, and all of that. But I had a lot of feedback from the audience that he just rambled on and on and on, and there was a lot of questions that we didn't get around to. And I feel like, honestly, the consensus of what the audience was saying is that these original covered call products are flawed products. And at some point, I've been waiting to do this, but I had to just go ahead and rip the band-aid off. I had to just go ahead and do it. Um, and this is a financial journey, so I'm fully transparent. So I show all of my trades and stuff. Now what's funny, and I don't have the screen up in front of me, but oh, actually I do actually, and let's do first things first. So let's get the bad news out of the way first. Well, here's the thing. So I had about I need to go to Discord. Sorry, folks. Let's see, Discord. Here we go. Let me go to my Discord. Okay, so going back, and unfortunately I'll have to update this with the newest news here. Um, Funny thing is, there was a chance if things went the other way, there was a chance of, doubling my gains and stuff, by the end of the year, but that's obviously not going to happen. Now, um, some of this stuff I'm probably going to have to roll way out. But what I want to show, and this is important, as far as my one-on-one clients and all that, I mean, the experience I bring to the table is important. Knowing how to navigate margin and all of this or that. For most of you, I would recommend not even touching margin. In fact, when the dust settles on this, I'm gonna ask them to remove margin from the account because I only want to trade with my own money. I never was a big fan of it. I can see it for strategic opportunities. Now, I will say this. For a company to have back-to-back earnings misses, I thought that was very unlikely. I thought they would have something good happen. I didn't think they would get slaughtered today. And it's so dumb because it's always something about how they miss sales by a certain percentage or how their margins on products, there's that word margin again, but like their margins on products weren't as high as they thought it would be because they're changing some kind of, production code for something they issue, which is going to make it better in the long run, but doesn't help in the short run. But anyway, long story short, what I want to show here. Okay, so when I rolled this account over to Fidelity, I had netted about 237,000 for the year. Now, at my marginal income rate, I was on pace to get busted in taxes. This is the only taxable account because the others are all IRAs. Now, unlike other channels that some people don't actually care about tax at all, but unlike those, we care very much about tax over here, and it's a very key part of your finances. So just assume, because they pretty much tax all this at short term, which is ordinary income. So I was headed for a very expensive tax bill. So I have been thinking about what they call tax loss harvesting at the end of the year. My hand got forced. So right now, I'm in a situation I didn't quite want to be in, but I'm reducing my tax bill for one thing because now, when you do this, basically this 237,067, you probably shaved off about 20,000. Hold on a second, let me look here again. Excuse me. How is it only, hold on, between this? Okay, so what you saw, okay, TSLY, obviously every single lot on here was a loss. And I just said rip the band-aid off. Mike, what he said yesterday, there was really no reassurance this will ever recover. And if y'all want to know the truth, I've been wanting to dump this shit for a while because watch. Tesla is at all-time highs right now, and this one is just not recovering. And some of you, this is what absolutely drives me nuts because you go into Discord and some of you are like, "Well, why would you sell? It's starting to go up again." Dude, I've been holding this for over 2 years, and I bought into this when it was like over $20 or $30 a share in some cases. I've watched it reverse split. It's never going to get back to that. And those of you trying to tell me what to do don't pay attention to history. I get it, history is an underserved subject, but you don't pay attention to the fact that it was way higher in the past. You just say, well, it's $8. It went up to 8.25. Oh, it's a great product. No, there's almost basically this was one of the first ones they came out with. So there's almost 3 years of history with this. And again, not to bash YieldMax, I'm just being a realist here. So look at Tesla stock. Here's two things I want you all to focus on here. Tesla stock is at an all-time high, right? TSLY, because it implements a covered call strategy with the synthetic, and again, it's boxed in by the prospectus. I asked Mike on the live stream yesterday, I said, is there any way, anything that can change to make this, any things you can do to make this capture more of the upside? He talked about some stuff. I don't see it happening here. I don't see any way forward with this, so I dumped it today. I hate taking losses, but I did. I just say rip the band-aid off. So bottom line is, watch TSLY here, and some of you are gonna say, well, it's going up. It's going up this and that. Like, I don't care. It's not tracking with the underlying. Here's what I see: price return, which is relevant. I get it. Dividends not reinvested. 84% in Tesla, negative 28% in TSLY. Okay, but the dividends, I get it. Reinvest the dividends, right? Well, guess what? And I see this with every single one of these. It still lags behind the underlying. Still, name one fund that pays dividends that doesn't keep up with the underlying. That's the blunt truth on here. That's the blunt truth. You're not going to get it from any channel on here because everybody on here is chasing views. They're chasing views. They want the dividend revenue. They want the people that love the 5 to 10 cent ulti dividends. That's just the blunt truth. And that's what you're going to get from me. Growth outpaces income. It's just the bottom line. When you're an investor, and I get it, I have people that tell me I don't even want to think about money. I don't want to care about money. I don't want to be rich. I've literally have people tell me I don't want to be rich. I just want a fixed income. That's fine. If you just want a fixed income, then TSLY is your golden product. Go all in on it. If that's all you want for the rest of your life is $1,000 a month, you don't care anything about your net worth or anything. But that's not me. That's not the bulk of the audience. But when you're looking for total return, which most rational investors do, this is a garbage product. It's garbage. You look at it over 3 years, watch. Tesla, 134% total return. But the dividends, I get it. Okay, even with reinvested dividends, it's look at this. It's Tesla stock. If you were just invested in Tesla stock, it's almost double. And you know what? You could even juice that further. If you like ETFs instead of stocks, watch this. Double TSLL. This is the direction Tesla. I'm surprised there's not more of these. Watch this. So you're talking about, well, it's volatile over 3 years, but you're still, even in the 2x leveraged ETF, even that one's not pacing with the underlying. That's kind of bizarre. You know why? Wow, look at that. TSLL is barely keeping up, and that's supposed to be a leveraged. How about that? Wow. Well, forget that. I was thinking that was going to go another way. Nonetheless, here's the thing. Okay, you all that are new investors, you're getting into the same trap I fell into when I got into this. You're seeing this. Look, Tesla, 14.4%. Tesla tracking almost identically. That's what it does in the short term. If that's what you like, here's the thing. You know what? I may even, when the dust settles on this, I may even go back into Tesla just to have those dividends. I did like seeing those $400 dividends coming in, I'm not going to lie. But over time, it's not sustainable. You see, over a year. Now I get it. You're seeing the exact same chart that sucked me into this. Same thing. Okay, you can look over a month and yeah, it's actually in a month it's outperforming it, but that's short term. In the short term, these can outperform. They change to weekly. That's a very encouraging sign. If you all just got into Tesla and you're convinced that it's great, that's awesome. Knock yourself out. That is awesome. I'm happy for you, truly. But if you look here, okay, 860, here's the thing. So price, right? 860, watch, since a year ago, $12. And I get it, we're paying dividends. We went up to 17.98. That's actually where I should have sold. It was a mistake not to sell. In fact, there's actually a person, I think you know who you are. You told me to sell at this time, and I didn't listen to you. Um, yeah, right here, 1730, but then went down and down and down. Meanwhile, Tesla stock hit all-time highs. Now from here, October 1st, you see we've dropped another dollar, but since we've been doing weekly, we've been paying steady. Anyway, long story short, that's that. Okay, what else do we have here? He says I've done it as well on a lot of YieldMax funds. Next FBY's next says they paid me 1 cent. I know 1 cent's very low, right? Uh, the fact that Roundhill can use leverage to get more upside in swaps and YieldMax keeps in the same losing strategy is crazy. I tried to ask him that yesterday. He was very verbose. I'll have to go back and listen to everything he said. But he said something because I brought that up and he's like, well, it's not an apples to apples comparison or something. But anyway, all right. So just being a realist here. Now, what I want to show you all here, so that's that. So realistically, it's good to shave some of this off because it'll reduce some of the, because here's what'll happen. Okay, I showed you all this, right? So this is unfortunately a $23,000, 23,000 that comes off of this. So now we're like, we were moving down the football field to score more touchdowns, but now we've taken like a false start penalty or unsportsmanlike conduct or whatever. Now we've moved back. The yardage is moving backwards now. So we went from 435 for the year combined accounts. Oops. Well, that's nice, but that'd be cool. 2 million. We went from 435 for the year minus 23,000. So we're back down to 412. So we wiped out probably the last half a month or so. and gains in the strategy. But anyway, that's my total capital gains for the year, not just wheel stuff. But what I want to point out, so I said 237,000, right? Minus 23,000. So now the taxable on this is probably going to be, we're just saying 28%. So I just shaved the taxable income down a little bit. So I'm going to do this more tomorrow because if things keep moving against me, I'm going to have to come up with more. I may just have to liquidate the entire account. Who knows? But anyway, that's that. I sold my TSLY. That's the key theme of the video here. I sold my TSLY to cover some margin positions. Next thing I want to go over is the wheel strategy. And this is why, again, the wheel strategy is not flawed. It's perfect because on my other SMCX positions, I had covered calls open at 50. Now, the mistake I made that I'm actually absolutely going to regret and lament for the rest of the year. Back on like October 10th or so, when SMCX was at 58 and I closed out all my positions, I should have just left them closed. I should have just, because there's actually three times this year that it's had a big run up. There's three times this year for a company that's so, as some people say, so bad, so flawed. There's three times this year that this company has actually soared up and you could have made a fortune. I've caught two of those. The one in mid-October, I wish I could go back in time and just keep it closed and not do it again. But you get kind of greedy with this. That's what happens. You get excited, you go back, you're like, all right, let me go back out at 70. When I went back out at the same strike, that was a mistake and it bit me today. Um, all right, so let's look here. He's telling me to roll. All right, what I want to show you all here is this is the bright side. Okay, so today on my calls, when you're doing the wheel strategy, some people say, oh, if you get assigned, you're a bad options trader. Well, a wheel, picture a wheel, right? You've got puts, there's a big middle piece to that. It's actually assignment. So for the wheel to work, if you're just basically selling puts for premium and then realizing all of it, you're not actually doing the wheel. You're just trading cash secured puts. To actually do the wheel and to make the full circle of money, you sell the cash secured puts. You are picking the strike price that you want, that you're picking the strike price that you like. I happen to go way above where it's currently trading at to take in a lot of premium, right? So you go with that, and then if it never hits that strike price, you get assigned. Now, getting assigned is not a bad thing at all. The only thing I'm worried about here at this point is staying in the game. As long as I stay in the game, I'm going to make money. I don't worry about that. In fact, I will make millions of dollars in my lifetime with this strategy. Mark my words. This strategy is fine. You just got to do it properly. Don't use margin, I would say. Don't max out your risk. Don't use margin. Do it with your own money. I've always been a big believer in using your own money. I've seen a lot of other YouTubers on here with flashy presentations about margin and all that. Some of them know what they're doing, most of them don't. For most people, margin doesn't work. Stick to your own money. You don't want to find the shortcut or the quick or the easy way out. Work, make money, use your own money to trade. In basically 90% of my accounts, it's my own money. This one's my own money too, but they gave me margin for some reason, and what margin is like, this is my analogy that I would use. It's like they give you enough rope to hang yourself, basically. Some people out there will like that analogy. There's some sick folks out there, let's just say. But anyway, so margin, it's like you're climbing off a cliff and you're trying to like, you're exercising, you're climbing like to the next cliff and there's like a gap or there's like a gorge or something. And it's like they keep on, as the market goes up, they keep on, here's more rope, keep on. And then you're like, ooh, you're seeing that beautiful other side. It's like paradise over there. And then they just keep giving you more until next thing you know, you're off the cliff and you're literally hanging over the gorge where if that rope breaks, you're splat. So, long story short, um, staying in the game is key. Margin doesn't, when they let you do too much with it, uh, it may not let you stay in the game. But with the wheel strategy, okay, so you got cash secured puts over here, assignment, which some people are bad or makes you a bad trader. That some people think it's bad or it makes you a bad trader, but it's not. Assignment is a part of the wheel. So you get assigned, and then what you can do, you see the screen here, you can then sell covered calls on it. So I happened to do this back in mid-October. when it started dropping again. So I sold covered calls. So now I'm actually up 70% on the positions that I got assigned earlier in the year. So I took in this much premium. I'm already up 70% in it. Right now, I can't buy it back though because I don't have the cash to buy it back. But I'm sitting on a beautiful gain here. So that's the beauty of it is that you make money on both sides. When it drops massively, you just close the trade out and you realize a very nice gain. So I would say for the haters, take that. So that's part of the wheel. So then when you get called out, then it's rinse repeat. You start over again. So that's how I look at it with the wheel. Hey, welcome, Piper. Are you going to sell any others covered call funds? I remember you had QYLD for some reason. He said, I like how he says for some reason. Well, here's what I'm going to do. I'm planning to get out of all of it, actually. I still have XYZY. I have Coney. I've been wanting to do this for a while. And there's a couple others in my Discord. Well, I think Piper still likes YieldMax. But here's the thing. Once I get back, once I stabilize the situation here, basically, I'm gonna pick some new like safe dividend funds, probably some WPay. TSLY's cheap. I may get back into TSLY. Um, who knows? But I do like to be invested in what I talk about, so that's a key thing. Um, let's see here. All right, Senecola is back. He left. I think he left over some of the Khmer stuff, but he's back now. Anyway, welcome back. We always welcome everybody. Okay, so yeah, I'm still in XYZY, Coney. I'm in YMAG. I like Biggie, by the way. Biggie is one of them that I like a lot. I don't know if it's named after like Biggie Smalls or what, but I like that one. It's up, it's stable, it's one of the target 25, and I'm going to stay in that one for the foreseeable future. What do you say? If you compare QIO to underlying QQQ, it may have stopped you buying Tesla. I know, you know what's funny, and we're going to start doing this. We're going to go back in time. I call it in happier times. There's a video, and Andre's on here if you're still on, welcome again. But there's a video where you and I were doing a live stream, and the irony of it is that Kumair was actually on it, and he was commenting. I call it in happier times. But anyway, and Andre actually nailed it. He said these products are going to go down over time, and it's literally like seeing the future in retrospect. And I was saying, I can see that happening, but the jury's still out. Let's give it a chance. I was more, I guess, open-minded about it. I didn't want to, call it crap before it had a chance to prove itself. But we pretty much nailed it on that live stream, I have to say. And going back, I'm going to go review that again because it's amazing over 2 years ago to see what we were saying back then. But anyway, long story short, this is a time to tax loss harvest, dump it all basically, and yeah, I've been wanting to do this for a while. Unfortunately, I didn't sell here, but if you look at the last probably year or so, could have sold here, could have sold in May. I mean, I'm only $1 short at this point of where it was, other than here. And I just really don't see it getting back to that because here's the thing. So and this is key. I want to go over the side by side chart again. This is why I just have completely lost my faith in this. And I decided today, forced my hand because I pretty much had to. So I'm like, let me just get rid of this. But what I want to show you here, so TSLY versus Tesla. See, Tesla started having a big run up. Tesla did capture some of the upside of it. And I was okay with it here. But look what happened here. It just continued to get divorced from the upside of Tesla. And then what happened here? This is where it just really went south for me. Tesla had a huge run up. It hit basically new all-time highs and surpassed them. And Tesla basically barely participated in any of the upside at all. So basically by September, I was like, I'm done with this. And, I was holding the bag. I've been holding the bag for a while, but basically today forced my hand. So look for the positive in everything. And I'm going to end on that note. So thank you all for tuning in. Lesson learned, I would say for most people, margin is not good. You got to manage your way out of it. You may have a 30% margin requirement, which means when they give you a number that you're getting called on, you may actually need to divide that by zero point 0.3. So say you see this here. This is another key thing here because you may see like 15,000 and say, oh, that's easy. I can come up with that. But if you have like a 30% maintenance requirement, you may owe 50 grand. And if you're leveraged out on everything, where are you going to come up with that 50 grand from? So margin's dangerous for most people, folks. I would say stay away from it. Thank you all for tuning in. Happy investing. Here's hoping the market does better. The way I see it, honestly, I don't know why this happened, but learning experience. Tax rates were cut, corporate tax rates were cut. Ironically, inflation still remains high. Fed rate, interest rates are getting cut. Um, we're probably going to get another one. Unemployment's still relatively low. Government's still shut down, but should reopen. I still see a bullish end to the year, folks. So hang in there, and we'll see you all in the next one.